All right, everyone, this is the last chapter in Unit 1, and it's covering our tax system and filing tax returns. The purpose of taxes are covered in this chapter, and there are plenty of videos that can be found online that can give you more information on this. But the government collects the money, and the government calls the income collected revenue. It's the largest amount of money that the government collects, and it's used to fund things throughout your town, state, and country. There are three types of taxing that the chapter covers. Progressive tax, which takes a larger share of income as the amount of income grows, and that is described when you look at our federal income tax brackets. So if you look at those income tax brackets, the more money you make, the larger the percent of money comes out in taxing. So that is your progressive tax example. Regressive tax are things like sales tax. So it takes a smaller share of income as the amount of income grows. If you're paying a sales tax, the actual amount on the item will grow, and it takes a smaller share of your income as your income becomes larger. And then lastly, proportional taxes, which we can see when you see property taxes. So proportional taxes are flat taxes. They stay the same regardless of your income. So if you're buying a house and the tax bracket for that area is a specific number, it doesn't change depending on your income. It is what it is. It's a flat tax system. There are a lot of components to the taxing system, and you're going to hear or have heard about the IRS, and that is the branch of the government or the Treasury Department that has the power to tax the people. They work on making sure that there is what's called voluntary compliance, which means that everybody has voluntarily prepared and filed their taxes. And the tax bracket, which I've referred to earlier, refers to the rates, and that's another thing that the IRS has their hand in. The other term you want to be familiar with is the term tax evasion, which basically means you have chosen not to pay your taxes. And this is a serious crime. There's a lot of different punishments that could come into play here, one being fines, one being imprisonment, and in worst case scenarios, you could suffer both. But the IRS audits, and you probably have heard of a tax audit before. It's when the IRS examines your tax returns to make sure that you've done everything correctly. You could have an office audit in which they would come and send you maybe a letter of some sort recommending that you come to them, bring all your stuff, we're going to go through it. A correspondence audit could just be a letter saying, hey, we looked through your file, you owe $30 more for last year, just send us the check, and it could be done with it just through the mail. And then there's the field audit where they come to you. All three types of audits are usually done on official paperwork with official letterhead. Do not just send a check anywhere without first making sure that it is actually a request from the IRS. Around tax season, there are a lot of deceptive practices that take place where people try to scam other people, claiming to be the IRS, claiming that you need to pay more money, and there's ways for you to double check to make sure that those people are who they say they are. So the IRS does audit, make sure it is the IRS. 7.2 covers filing status, and that tells the government what tax group you are filing under. So it's going to ask you to check one of these boxes on the form, and the list of how you can go ahead and check are here. There's more information about what each of these mean in both your textbook, and if you Google this, there's plenty of YouTube videos that will describe these in more detail. Exemptions is the amount you subtract for each person who depends on you. So exemptions can be reducing of your taxable income. So in the end, exemptions really help you either get a nice refund check back or pay less in taxes. So you may be a dependent, or probably are dependent right now, but you could also have a elderly living relative living with you who would be considered a dependent, and basically they would be then an exemption for your guardians when they file their April 15th taxes. Gross income is all the taxable income you receive. So everything that you've made money on throughout the year is considered taxable gross income. And that could be earned, which most of us are familiar with, working and getting a paycheck, or it could be unearned. Things like winning the lottery is considered unearned income. Interest on investments would be considered unearned income. All of it is considered taxable, and taxable income is what they want to see and make sure that you've paid tax on. And by they, I mean the good old IRS. This little chart here just gives you a quick formula so that you know exactly what we're talking about. Gross income minus adjustments then means adjusted gross income. And then from those adjusted gross income, you can take away your deductions and exemptions. And what is left is what you actually need to pay taxes on. So you want to go through and read in the chapter exactly what all of these things mean. And we're going to briefly talk about deductions now. Itemized deductions. Here are some examples in this box. You could subtract them from your adjusted gross income. So if you've moved, if you've given a lot of gifts to charity, save those receipts, and property taxes, all of those things help you deduct from your adjusted gross income. If you do not have a lot of deductions, you may do what's called a standard deduction, which there's an allotted amount, it changes every year, and you can just do a standard deduction without all the details and the paperwork. A tax credit is an amount subtracted directly from the taxes owed. So if you have figured out exactly how much you need to pay the government, a tax credit will help lessen that blow for you. It's different than a deduction. A deduction, according to this chart that I showed you, and I could go back, is subtracted from the adjusted gross income, but a tax credit is deducted from the tax owed. So the government allows tax credits for certain educational expenses, child care expenses, and other things, depending. And when it's time for you to file, you would either want to check with H&R Block or a private accountant, and they can give you a listing of things that would be considered a tax credit. Lastly, these are some forms that the book refers to and that you want to be familiar with, but this is who and how you would file your income taxes when the time comes, which again we've mentioned several times at this point, so that date should be embedded in your brain, April 15th.